Good morning. Welcome back to the Retirement Report. I'm Hank Parrott, your host. All right, we've been talking a little bit about the markets to start out, just to give some perspective. And NASDAQ was another one that I didn't get to the numbers on that. Minus 27.5% year to date still, right? And this is with November, a really good month for NASDAQ for tech. We were up 9.1% in the month of November and 3.9, almost 4% month of October. So even with the last 2 months, with an increase of basically 13%, right, in just 2 months. That's quite a nice little run up, but we're still, even with that, still down over 27% year to date. All of this, again, being said, as I said, it's not, personally, when the Chairman Powell came out and talked about possibly easing up things, and the market had a really great day as a result of that, the problem I have is I'm a little concerned that we're getting a little ahead of ourselves without having those November numbers first. Now, of course, the Fed sees more than we see, potentially in some of the numbers they're crunching, or certainly than you and I might see. But even with that, if you're sitting there trying to figure out, well, is the market really taken off now? Did we hit that low in October? I would hope so, but we really won't know. Won't really know until after these November numbers come out here in another week or so. So I'd be being careful, cautious still, and watching to see those numbers before getting too excited about whether it's in either direction, okay? Now, again, I wanted to talk to you about ways, again, asset allocation. It's a good time to reassess, and if you need some help with that, you can call my office. That number is 615-376-5325. I'm going to be talking to you about some alternatives today, some safe money, but at the same time, it's all about the overall comprehensive plan, the investments, of course, being an important piece, but not the only piece. You need to think in terms of Medicare. You know, what's your health care costs? Those are going to be huge. You're talking about over $300,000 for an average couple age 65 over their lifetime, looking at $300,000 plus out of pocket for health care expenses. And this is not counting like long-term care and other things you may get into as well. So all of that we want to address with a good comprehensive plan. And we do talk about long-term care. We talk about Medicare, what it covers and what it doesn't, the different types of Medicare, whether original Medicare or Medicare Advantage plans. All of that is part of good comprehensive planning, is recognizing how that fits in. How do we manage the risk of health care costs in retirement, and how do we minimize those costs as best we can? And the next thing we talk about also is Social Security. When's the best time to take Social Security? 62, 65, when you're full retirement age, between 66 and 67, or waiting until age 70. And it's going to differ for each person as to which is the best one to do, and that's where the comprehensive planning comes in. Again, we help you determine which is best for you. And if you're already taking Social Security, we also want to talk to you about how to minimize taxes on your Social Security, another big factor. And of course, required minimum distributions, when those are going to come up at age 72, what impact that's going to have on your taxes. Is there anything that can be done, any strategies to be employed prior to that time? Okay, all of that is good of good comprehensive planning. It's all part of it. So again, if you'd like to get a comprehensive financial plan at no cost to you, just call my number, 615-376-5325. We'll get your information. We'll send you out a packet of things to bring to your appointment with me. And some of the things we're talking about today with regard to investments, safe money, and ways to, and some alternative investments, by the way, ways to basically, again, get the most out of your money while managing the risk. In other words, we want to get you the best return, but we also want to be thinking of minimizing risk and volatility in that process. So again, just call the office, 615-376-5325. As I said, we'll get your information, send you out a checklist of things to bring to your appointment with me. We're going to look at income, expenses, assets, liabilities. We're going to factor in for inflation, for taxes, rates of return on your money, all of that, so I can show you your financial future based on what you're doing today and help make that a brighter future by sharing strategies that we've developed over the years to help you there. All right, and by the way, when you come in to see me, I'll also give you a free copy of my book, 7 Steps to Financial Freedom and Retirement. All right. And we're going to talk about, and there's a nice picture of the book. So again, 615-376-5325. Okay, we're going to talk about annuities. So let's start with the basics. What is an annuity? So it's a financial product that can be customized to give you lifetime guarantees in retirement. Now, so annuities traditionally, this is one of the things, guaranteed lifetime income that you can't outlive for both you and your spouse. So it can be for two lives at the same time. So we're looking at basically an annuity is a long-term tax-deferred investment. It's able to provide protection for income, legacy, so for, looking after if you've got plans for kids, grandkids, that kind of thing, that's another part that annuities can help with. Spousal needs, again, one predeceases the other to make sure that the surviving spouse is able to maintain their standard of living and not have to, all of a sudden be put in a financial bind because half the income, for instance, maybe went away. You may be a pension, or certainly with Social Security, that's going to be the case. If you're getting two checks, you're going to get the survivor will get the larger of the two checks, but just one check at that point. The one check's going to go away. So all of those are reasons to plan for, well, how do I supplement then? How do I make sure there's going to be enough income to supplement Social Security, pension, whatever other sources you may have, so that you don't have to worry about running out of money during your lifetime, and again, in particular for that surviving spouse. Annuities are issued by an insurance company, purchased through a licensed financial advisor, able to be tailored to your unique retirement needs. And this is one of the things we get into, is matching up the right product. And one of the reasons I want to go into this with you today is so that you understand, in particular at a time like this when we're concerned about the markets, we're not sure, what the future may hold there, at least in the near term, but also thinking in terms of wanting to have a more stable income. I'm going to get into a lot of strategies where these can be very beneficial there and help you in terms of determining, one, if this is something that would be of value to you. Two, one of the things annuities do, that providing guaranteed lifetime income that you can't outlive, is making sure that you're, for both you and your spouse, if you're married, that you're both taken care of, and that income it's like you can create that income as a part of your own planning. So in fact, here, annuities can provide lifetime income, as I said, which here we're looking at either through an annuitization where there's no extra cost, or through an optional income rider, which maybe enhances the amount of income you can get down the road, and has maybe a fee attached to it to get that additional. And this is one of the things when we're looking at annuities in general, we're looking at the difference between those that we're seeking for the most growth, and then those that maybe have the best income option and give you the highest income stream if you were to take that. And again, the legacy planning part, an annuity can provide you the opportunity to create a living legacy. Some of these will have, in other words, family endowment riders, and these riders, again, at an additional cost, it'd be a fee, but they're going to guarantee that you're going to get an enhanced death benefit beyond what the investment itself might provide. So that's something, again, that could be a very, of interest to you. Spouse opportunities can be used to protect, preserve assets for a surviving spouse, so that when one passes, that income is going to continue for the survivor of the two of you for a couple, okay? And of course, for individuals not married, this is one we've used annuities to really good effect for clients that I've got that where they're not married, maybe don't have children, and their concerns are, how do I make sure, in fact, even more so because they're totally dependent upon themselves for taking care of themselves throughout their lifetime. This can be really beneficial in making sure you can maximize the income, in particular when we're looking to get the most income possible and we're not concerned about legacy issues at all. Then that opens up some additional. See, this is the thing again about matching the right product. Certain products are going to give you maybe really strong income, as an example. Others, the income wouldn't be as great, but the growth on the product would be much greater. And so it depends on which goal we have, or maybe we're blending goals. Maybe we're taking some that we want income on and some that we want growth on for future security. So there's a lot of ways that annuities can be used, and a lot of different annuities that we're going to talk about to find the right one that would be a good fit for you. So again, they're flexible. So as an investor, you're in control. Right? There's flexible timing. You can determine, for instance, whether you need income now or income in the future. Flexible opportunities, ways that you can invest even within an annuity. Flexible options within that, such as different indexes, and a flexible withdrawal schedule. Some of them, again, where you can take income right away or income, and sometimes we'll ladder them, meaning we'll have one maybe for income right away and then another for income, say, in 5 years, and maybe another one for income in 10 plus years. Lots of different ways we can put these together. All right, we're going to take another break. When we come back, I'll get into more about these annuities with you, and they'll help you learn whether annuities might be a good fit for you as well, in particular in these uncertain times with the market. But first, a break. Join us here. We'll be right back on the Retirement Report.